And welcome back to Half. Shares of Coinbase tumbling this hour. Goldman Sachs downgrading Coinbase to sell while actually upgrading Robinhood to neutral. The firm notes risk reward is more balanced with Robinhood. Goldman cutting Coinbase's price target to $45 from $70. It's one of our calls of the day. Jenny, I'm going to start with you. Obviously, two of the riskier equities out there right now. Both of them have some correlation to cryptocurrency. Those cryptocurrencies down 50% or more year to date, the major ones at least. How do you view these stocks?
I mean, I view them as something I wouldn't touch with a 10-foot pole. And I know when Coinbase came public, we took a peek at it and we said, how do they make their money? And it was really interesting because they actually charged a commission as a % of the transaction. So right now, if you think about it, even if they're charging the same, I think it was 1.5 or something % on individual trades and much less than that on institutional trades. But back then, Bitcoin was at 68,000 and now it's at 20,000. So even if they're charging the same way, they're probably earning about a third of what they were. As Ed Yardeni says, there's no intrinsic value to Bitcoin. So it could trade at 0 or it could trade at $1 million, which means you have no way to price what they're actually going to earn. And this is a market that hates uncertainty. And with that, yeah, maybe one day they do earn a lot, but we have no way to tell that. This gets back a little bit to the healthcare before, where healthcare, you know what they're going to earn. Coinbase, we have no idea what they're really going to earn. Robinhood, I got no idea on that one either. So for me, I'm out.
John, you got any ideas over there?
Yeah, I more or less echo what Jenny said. I think that Coinbase is a real problem right now, and Robinhood relies just on selling the order flow. Not that every broker out there doesn't, Frank, but when you're a broker that is built solely on the idea that you do not provide anything beyond the bare necessities for trading. And then as traders mature and as they get a little more skill set that they'd like to use more spreads and things like that, then that's just not a viable platform anymore. So Robinhood, nope. Coinbase, if it got cheap enough, but it isn't there yet. I know Goldman's taking a look at Celsius, but that's a whole different animal. I think most of these are pretty much stay away right now, Frank.
All right, next up, Old Dominion upgraded to overweight at Wells Fargo. This is kind of in my wheelhouse. This is a less than truckload trucker. That means a couple companies put some different loads onto a truck to go to the same place as opposed to getting one truck by themselves. Joe, I'm going to come over to you. Are you seeing opportunities in the LTL space?
Well, I've owned this name for previously in the past, sold out of it in early April. A lot of that had to do with the declining rates for freight that we are seeing. This note speaks specifically towards an improving environment there. At the end of July, you're going to get an earnings report, and hopefully you'll receive further confirmation that that, in fact, is what's occurring. If you get that, then this is a name that, without question, as it relates to trucking, you want to own. It is best in breed. It is a company with a very strong capital allocation strategy, both in terms of buying back their shares and then also having the free cash flow generation present. But I want confirmation from management on that earnings call before I buy this stock. But it is without question a name you cannot ignore just because it maintains such a high quality relative to its peers.
Yeah, one thing I want to point out to you, Joe, and John, I'm going to ask you to jump in on this too. We don't talk about this on Halftime a lot, but coming up in a few days, the West Coast ports and their unions, their negotiations, their contract's going to come up. And the last 3 times there were negotiations, there was some kind of disruption over the last 20 years. The most recent one during the Obama administration, there was a slowdown there. There had to be some intervention, which could be a tailwind for this company and also the whole trucking space. John, what's your thoughts on it? And also, what other activity are you seeing in the transports?
Well, I like one that I almost complimented Steve Weiss a little bit ago, and then the tech gremlins hit me. So, Frank, this is a stock Steve talks about a lot. I like XPO Logistics because of how they basically try to work the system to get goods and so forth from point A to point B, whether it's full truck, full boat, whatever. This could be something, Frank, that might require a Jones Act suspension. Again, if indeed we do see those ports disrupted the way that you're saying they could be, because we've already had some pretty significant disruptions in that supply chain. And that's something that America does not need right now, is another bout of that. So if that happened, Frank, I bet you would see a Jones Act suspension. I don't think the president would have a choice at that point.
All right, you're also buying Delta calls?
Yeah, I've been buying Delta Airlines calls because upside call buying in the jets, that broad market ETF for the airline sector. I'm not really playing in the Spirit Airlines, JetBlue, Frontier space, Frank, but I am playing in several of the other airlines. And today, upside call buying in DAL was why I jumped on that one.